But this will go on our Elite station, so all the agents can see it. So the ones that had showings and such that wanted to be here will be able to review it and send. I'll make sure that everybody gets this out to the all agents email as well.
Thanks. Thanks for having us too, by the way. I do appreciate that. So I guess I'll open it up. We're with PNC Bank, and we were asked today to come in and sort of talk about commercial real estate, specifically investment real estate. It's sort of a nice hot button with us right now at PNC Bank, and we have Haas with us too, which comes with about 40 years of experience, most of it in commercial lending and now solely in investment real estate. So I mean, you got the best of the best sitting at the table right now. So any questions that you have with investment real estate or even commercial lending, which I would handle most of those questions with Haas as well, please bring them up. We're one of the few institutions out now that is pretty heavily into investment real estate, which we're going to talk about a little bit today. So any questions, please stop us and ask. That's a lot of times where things are learned. So I will turn it over to Haas.
Great, thanks, Nick. So yeah, so we are going to talk about investment real estate today, and of course that is where the real estate is owned by one party and leased to an unrelated third party. That's what we think of investment real estate. If you look at the first handout, which gives us investment real estate guidance, every bank's a little bit different, but at PNC, this is what we like in terms of asset class in investment real estate. So our favorite category is multifamily. Apartment buildings, 4 units and up. It's a hot category nationwide. There's a lot of building of multifamily units, and we like financing. There's really no, as long as it's 4 units, there's no limit on the size of the dollar on the low end. But you gotta think about, do you really want to mess around with a $50,000 deal, or you want to do something bigger? So there's no, and on the high end, we do about $3 million for those properties, and we like them because they hold their value. It's easy to replace tenants if you lose tenants. It's a kind of a granular business, so we just like that business, and we'll finance 80% loan to value, usually 5-year notes with 20-year amortizations. Our second favorite asset class is medical office. That's big business these days, and we see a lot of it. A lot of doctors will have a building where their office is in part of it, and they've rented the rest to other medical firms. One type of, we like that. We like just generic office buildings. That tends to be a pretty stable asset class. Commercial is you'll have the high bay open space in the back with a little office in front. That tends to be most of the commercial you see in this market. I don't do a lot of that because it tends to be owner occupied most of the time, but every once in a while you'll find somebody who'll own a few of them, renting them to commercial companies. We like to do that type of business as well. And then retail, we'll do strip centers. And you hear a lot about retail business being under pressure from the online shopping, and we do consider retail to be somewhat more risky, so we'll do it a little bit more carefully. Our loan to values will be lower, and we'll look for more cash flow, most important for these sponsors. But we do retail, and only about 8% of retail is online. So people are still going to stores, and these smaller strip centers tend to be, they'll have a hairdresser, they'll have a grocery store, or a party store, or a hair salon, or something, dog groomers, whatever. You can't really deliver that by drone from Amazon, so we think those are pretty safe from that kind of competition. So I actually think those are okay. And there's a lot of them out there. And the ones we like the best are the ones that people have owned for a number of years. They've got equity built up, and so they don't need to be over-financed in order to make the deal. And then there's a few other things we can look at. Mini storage, they seem to be popping up everywhere. They're building these climate-controlled mini storage everywhere. We we can look at that. We can look at student housing. We don't love student housing because it turns over every year and they tend to beat it up. But if we can find it, you know, the right deal, we'll take a look at student housing. Manufactured housing would be like trailer parks. They tend to be cash cows. It's unbelievable how much money some of these guys make out in trailer parks. So we'll look at that. And then I have a long list of things we can't do. Hotels, golf courses, marinas. Kind of look through those. Land development, we don't do raw land. Raw land because it doesn't have cash flow. So all of our deals have to have existing cash flow. Nursing homes and assisted living, they're going up everywhere I look as well. They're building this huge assisted living and nursing homes. PNC just doesn't want to do them. Somebody's financing them because they're getting built, but not us. The other thing I wanted to mention is that if you look to PNC for financing on investment real estate, we don't want to just do standalone projects where the only thing we have from the customer is the building. It's hard in the banking business to make money just on the loan. We need to be able to sell clients other things. We want their deposits, we want credit cards, we want other products. The ideal customer would be someone who has a commercial business on one hand and then invests in real estate on the other. That's the ideal profile for us. But there's a bunch of ways to build kind of that, what I call strategic fit, where we can get other business from clients. I mean, we just don't want a guy flying in from New York and doing a deal. That's the only time we see him. We're not interested in that. We want a local guy who'll do business with us.
And be careful in single family housings. I know there's still some people around these days that run multiple single family housing and rents them all out. It's still not much of an appetite in that, not even on the commercial sector on it. It's just way too risky right now, so
Right.
make sure.
Matt's right about that. I get a call once a month from somebody who's got 40, got 100. They bought them all in 2008 and 9. And now they want to refinance them. Well, I don't know anybody who does that. Takes
Not
a
even
package
on
of those.
Not even on the conventional side.
I don't know anybody who does that. But there's a bunch of people out there who've got a lot of houses, and they want to package them, they can't
And
package
there's no
them.
way to do anything on, at least from you guys?
Not even on the consumer side, on our retail bank side. It's unless it's a vacation home or even a second property, but not as an investment piece.
Yeah. So,
I don't see, in your assets you cannot finance, I don't see laundromats, car washes. I actually have 2 clients, both of them are looking to procure buildings for those purposes. They're looking to also use line of credit to purchase all of they have a significant financial investment to go in and they would like to start that up.
Sure.
Is that something that you guys would be able to finance through this platform?
Is that gonna be an owner occupied?
That's gonna be an honor,
Yes, I would look at those. Haas
would?
wouldn't be involved on that
Yeah.
unless
Okay.
it's gonna be a multi-tenant or a straight investment real estate where the owner just basically is collecting rent. So yes, I would look at all.
Okay.
something like that you might do with an SBA
Yeah.
loan.
And also, if you're someone, and I have another opportunity for a retail outfit with actual living quarters above, and they were looking to finance that, would that be something that would also fall inside of this?
Yeah, so we call that mixed use.
Yeah.
Where they have a couple of, or 4 apartments up above, and then there's a retail, 1 or 2 retail down below. We do that, quite a bit of that, especially in older downtown areas.
Yeah, and that's
So
exactly what we were looking in a couple
Absolutely.
downtown areas where that's the way the strip is set up. The
Sure.
main strip always has that kind of format.
Right,
Yeah, definitely. We'll look
Yes.
at all those deals.
yeah.
And I know earlier you mentioned a minimum loan amount. What was it again?
There's
Well,
no minimum.
Okay.
There's a practical minimum, how much work
Right.
do you wanna do?
Absolutely. So what do you guys look for the practical
I think
minimum?
anything under $100,000 starts to get
Okay.
too small. It's
Questionable.
just not worth your time and our time.
Mm-hmm.
We occasionally do them. If we have an existing customer, lots of other business, I wanna do a small one, we'll do it.
Mm-hmm.
But you have to be careful.
So are you
with the
guys all
time.
manual underwriting then? You guys all look at the whole thing and see if it's a make sense deal?
Yeah.
Okay.
Yeah, there's
And
no-
usually before it goes to underwriting, we will break it down and make sure it makes sense.
So,
to the cash
so
flow.
for a rule of thumb per se, the agent should call you and say, here's my scenario, what would be the best way to structure
Absolutely.
this?
Right.
Okay.
Right. We actually appreciate that because we'll save everybody time. I can usually tell you in 5 minutes whether you've got a deal.
Okay.
Mixed use, you were talking about mixed-use apartments
Yep.
above retail. Somebody looking is, you know, you're talking about, you know, multi-tenant or owner-operated. Where is that gonna fall in with you guys, mixed use, where, say, the occupant is going to, the owner is going to occupy the business, but then rent out the apartments?
Yeah, so there's a lot of nuance to which bucket it falls into. But if you call Matt, he'll figure it out, and it's really transparent to you, because we'll either put it over here or we'll put it over here.
It all depends on maybe number of units kind of thing.
Yeah, I mean, if the retail down below is 80% of the cash flow of the building, you know, maybe we do it one way. If it's half, we do it another way. It
Gotcha.
kind of depends, but
Yeah.
you don't have to worry about that, just.
We'll decipher which way it goes, just the opportunity.
What are some of the, guidelines or big do's and don'ts while going and applying with SBA? Say you've got a business that's already in business, we'll call it 2 years, 3 years, starting to show some profit. What are they gonna need if, say, I wanna buy a building? You know,
So usually the rule of thumb's on the 3-year standpoint. Anything under 3 years, we're definitely gonna wanna have SBA, but that's not the only way.
Okay.
A lot of times, if there's a shortfall in collateral, you'll need to get SBA involved.
Right.
And a lot of times, many people like to have that security of the SBA portion being fixed for a straight 15 years.
Right.
They like that. They like that security, so they'll pay a little bit more. Some of the downsides, there's gonna be a little bit more fees involved when you're working with the SBA, because the government's gonna wanna have their portions to keep funding the program. But once again, that's something that we would work out both with the client and whatever makes the best sense for them.
Okay.
Now, with an SBA, as far as like the tax returns for the business, so say it's a business and maybe like it's an S corp, so they W-2 themselves.
Sure.
Does the business have to show a profit on the tax returns, or can you say, well, you're payrolling yourself, so you are making money, but even though the business shows that it's in a negative from the profit and loss standpoint?
Yeah, once again, it's something that tight, we would wanna get SBA involved because their ratios are a little bit lower than what we are on the conventional side. But the good portion about that is there's a lot more add backs and stuff that we can do, especially if it's an S corp, through depreciation and several other different factors that we can actually see where their profit is. So a lot of times their net profit isn't exactly their net profit. So once again, it would be something that we would look at beforehand and then just have that conversation with whoever the realtor is and the client.
I
Okay.
think the SBA is hip to how people
Yeah,
show tax laws.
they're more than on the conventional side, so.
Okay. And can you give a little rundown, because I know some of the agents here might not even know what SBA is. Can you give a little rundown of what goes into that? Maybe FICO scores you guys look for, or how it works?
Sure. Once again, their qualifications, it's basically per customer, so there's not really any cut and dry type. We'll take a look at all of them, but we do have a dedicated SBA lender with PNC that works with me, as Haas does with me on the investment real estate. But like I said, I'll be the focal point, and I'll involve the partners that would need to be involved. But like I said, some of the best ways to use SBA is if there's a shortfall of collateral, if it is a startup, if it is within the 3 years of doing business, because conventionally we really want to see 3 years of those business tax returns. So anything under that, I would get the SBA involved. Any purchases, I would get the SBA involved. Any buying out of owners, I would get the SBA involved if they're buying them out, but you have to buy them out at 100%. So they cannot keep ownership. You can't buy 30% of the business. You need to either buy all or nothing, and then it gets a little tricky involved in that. Did I answer your question, Tricia? Okay.
Yeah, so I mean, that'll be good for if any of you guys have clients that are, I know we get a lot of clients that wanna start businesses or looking for space to lease.
Sure.
You know, say 2 years down the road, you can call them up and say, hey, how are you guys doing? Instead of renewing or looking for another 3 or 5 year lease, this is something we can push them with the Small Business Association, see if they can get financing, even if they've been around for a short time. And it's relatively, I mean, just from the experience I've had with it, it was pretty cut and dry. It was little easier than you would think.
Sure.
You know, you hear, oh, this guy's been in business for 2 years. They just started making, $5 profit on the books.
Yeah.
No one's going to give them money. And then, you know, you push it through SBA, and sometimes these things go a little smooth.
Not only that, if they're looking for a place, and like you said, they're in 3 to 5 year leases, and they're spending, you know, whatever, $2,500, $5,000 for their section. What happens if you can rent the other 7 units out, pay for yours, operate your business without that cost? I mean, all that's going to your bottom line as a business.
Right.
It's gonna help you cash flow even that much better. So there is a lot of options, to look at there. If you can have other renters pay your note,
Yeah.
along with pay the note of an asset that you always can have, why wouldn't you take a look at that?
And the SBA won't do investment real
They
estate.
will not.
It has to be owner occupied real estate, so if there's any portion that's investment, I think they'd pass.
Yeah, that would come over to,
But the whole reason they were developed by the government is to help smaller businesses who can't get conventional bank
Mhm.
financing. So if we can't do it conventionally, we'll automatically look to the SBA.
Okay, I have a question too. So let's say I have a client that wants to buy a commercial building to open a car repair shop or truck repair shop. And they worked for somebody before, for a company, they're brand new in business.
Yep.
So they wanna start on their own.
Mhm.
Would we have to contact you, or you partner with SBA?
yes, I would be
Okay.
the main contact for everything. So I would, get Haas involved, I'd get our SBA lender involved. So I'm sort of the quarterback when it comes to the commercial banking, relationship. So I'll involve the partners that I need. If it's a straight conventional, I can do it myself. If we need an SBA, I'll bring my SBA partner Dale involved. If it's IRE, I'd get Haas involved over there, and all together we'll work on a solution for your
So
client.
basically,
And
be
this
able to
is-
just send it to you, and
Exactly.
you know what's best,
Yeah.
what
Mhm.
program's gonna work
Yep.
best, and
Yeah.
just,
And then we'll go down. I mean, my hand's gonna be in the deal no matter which way we go.
Yeah.
It's always gonna be there, so I can always be that
It's
that
hard
front
enough
person.
for us to figure out how to do it in the bank. You know it now.
yeah.
This is the type of business that you would be looking at.
Oh,
'Cause I
absolutely.
don't see it on.
Yeah, absolutely.
Okay.
Anything that's not really in the, we
Yeah.
will not.
Not.
We will take a look at it and find the right way. But like I said, bar restaurants are really tough.
Mhm.
I mean, it's everybody's dream is to work 30 years at GM as an engineer and go buy a bar or restaurant, but chances are, a lot of times those fail, and they fail
Just
really
because you
quickly.
can drink in a bar doesn't mean you
Yeah.
don't run it.
Yeah.
Right.
Truck
Super
stops,
stressful.
fall into the same category?
We say that again?
Truck stops.
I don't
Like
know.
to open a.
Truck stop?
Oh, truck stop.
Yeah,
Eh,
that basically is a restaurant, some type of.
Yeah, that.
Gas station.
Was
Gas
gas
station, I
fine?
would,
Yeah,
yeah, I would
okay.
stay clear away, you'd be spinning your wheels a lot. I'm not saying that they can't find financing for them, but financing in the gas station realm is a very specialized, very tough area
We'll
to,
do SBAs and those, so.
we have, they're not,
don't love
they're not putting a billboard up and saying, your next gas station financed through us, but we'll take a look at all of them. But I wouldn't focus strongly in that area, but we'll look at everything.
So I know we've had a lot of land contract commercial stuff through here, so this is gonna give us a different alternative to trying to make our people come up with those big down payments and all the clients that are calling in on those commercial spots. I know Andy had a couple in strip malls and things of that nature. So this will give us a new outlet for that, so these people don't have to try to facilitate those land contracts.
So the nice thing about land contracts is a lot of times you can get a low down payment deal from the seller. Once you have been in the building for a few years, and you got equity, and you're doing better, then you can take your land contract out, usually at a better interest rate and a longer amortization. So keep it in mind, you've done land contract deals, and talk to them 2 or 3 years out and
Give
see
them
if
a
they wanna
call,
go
see,
conventional.
yeah.
'Cause we like that, we like, you know, businesses with established cash flows, and we know they're gonna be successful in that location. So sometimes 2 or 3 years into a land contract, we can take that out at better rates and better, lower payments.
Absolutely.
And so that would apply to you have on the multifamilies then too. So if you guys have had some of these people that have bought the smaller apartment buildings and things of that nature, I know there's a lot of those that we've sold.
Yeah.
These are some phone calls we might wanna make after this
Sure.
meeting of, hey, we have a way for you to, refacilitate that, maybe get some money out to make the property better, new, laundry facilities, finish the basements, common areas, things of that nature. And then just getting these new multifamilies. We get investors all the time that are calling for small apartment buildings all the time, so.
And we're really hot right now on those, as Haas says. We're one of the few institutions out that actually actively look for the multifamily housing. Like he says, the cash flow majority, well, we have seen one instance that it didn't, but most of the time it will cash flow just fine.
And that's
So
the
it's-
75%, you guys are financing 75% of those multifamilies?
So I guess
That's
this-
big.
This might be a crazy or an odd question, but say we have a owner that has a multifamily. It was bought through an LLC, set up through a US LLC, but the actual owner of the company doesn't have a US Social Security number, he's a foreign citizen. Is that something that you could still finance? If he's got business tax returns for, say, 3 years or 5 years, is that something you can still finance, or do you need a personal backing on that?
You gotta have a green card
Okay,
and live here.
okay,
So he has to be what they call a US resident alien, so.
got it.
So, because we 99 times out of 100 want personal guarantees.
Right.
Don't want some fellow I gotta go find.
Yeah, right.
I want him in Livonia, I know where
Yeah.
it is.
Right.
But it's okay if they're out of state, because I know we have had quite a few from Florida, right? That's okay.
We can do that. Now, in our case, if the sponsor is in Michigan, we can do the deal. If it's in Florida, we gotta bring in a Florida banker to do the deal,
Okay.
because we wanna do other business,
Right,
like I
right,
said,
right.
with that person.
Okay.
So I can't reach down to Florida for the buyer, but if you have somebody who's coming from Florida, lives in Florida, wants to buy in Michigan, we can hook them up.
What about Ohio?
We've got people in Ohio too.
Okay.
So,
Is PNC all over the US? I know not all makes
Midwest.
sense.
east of the
Midwest?
Mississippi.
Okay.
East of the Mississippi.
All the way down.
Because we do get investors all over, overseas and all over the US, so that's good to know, Midwest.
Delaware and whatnot. That's where Homeboy's from.
You were talking about SBA financing for somebody buying out partners. You talked about it having to be 100%.
Exactly.
If you have four separate partners, 4 people owning a business, SBA is only gonna finance the buyout of the other 3?
All or nothing.
So it's not full-on buyout of one person, it's full-on ownership of the entire.
All or nothing.
The
When-
entire
yeah.
business.
Yeah. When you're gonna buy everything and the government wants to put their sponsor, they wanna make sure that they have one
Full.
sponsor,
Yeah,
not
gotcha.
3 or
Okay.
4.
First, it was bouncing back and forth in my head.
But on the conventional side, we would look at it,
You would look,
just on the SBA side.
you would look at buying out one
absolutely.
or
Yeah.
2.
Yeah. Absolutely we will. Just that's SBA's little glitch
Sure.
right there. That doesn't mean traditionally that I wouldn't take a look at it and see what we could do.
Right.
They could be 20 years with the company, the guy's just had enough, just wants his check to move, so they're gonna split the shares between the other 2 or 3 partners. That's definitely something.
Gotcha.
So it sounds like anytime we have something other than a single-family home, we should call and run the scenario.
Exactly.
Thank you.
So, yes, take my number, put it in your phones, keep it close by. If you don't have cards, I have some extras up here.
Look at that second page I gave you too, it gives you examples of deals we've done in Michigan. So the first 5 are all multifamily, you can see the size, in an 8-unit, we have 64 unit. It's pretty consistent financing, it's a 5 and 20-year deal with 75% loan to value. Office, these are smaller office buildings, one was a 320 because the leases probably rolled over in 3 years, we did a 3-year note.
I was gonna touch on that.
Retail, if you look at retail, you see the loan to value is 65%, that's because we consider retail somewhat more risky. It's probably the riskiest asset class we go, but we had $1.9 million for a 7-unit retail strip and a 4-unit at 403, 3-unit at 860, so, we'll do those. Commercial, we had a couple of those office, a little office in front with a big bay in the back, those are both 80% deals. And then here's a mixed use for you, 500,000, had some office and multifamily on top. Did that at 70%, that was a 10-10 deal in Royal Oak, it was a nice deal. And then medical office, we had $1.7 million on a big surgery center.
I wanna make sure I understand the owner occupied portion correctly. So let's say if somebody wants to buy a medical building, they have to be actually the doctor or dentist or whoever runs the business. They cannot buy it and then rent it to a doctor.
No, you can.
Yes, you can.
Okay.
Oh, yeah, you can do both.
Yep.
So owner occupied would be when the doctor uses the entire building for himself, the owner.
Okay,
So I'm the doctor, I own the building, I use the whole thing for myself, that's owner occupied.
okay.
then he could own another building that he rents to other doctors. That's investment real estate.
Hmm.
If he doesn't occupy any part of it.
Okay. I
And
was,
the other way is he's got a little piece of it, and then the rest of it is, that could be investment real estate.
Absolutely.
So he needs to have a small part of himself invested into it?
He does not.
Does not
Does
have.
Does not,
But that's
cannot have or does not have?
does not have to, but he can. So the whole idea is, a lot of times doctors will buy a big building, they'll use a quarter of it for their own
Mhm.
practice, and then they rent the rest out, it pays all their bills.
Usually
It's
rent
really
out to a
pretty smart.
pharmacy or something.
Yeah,
okay, but if the person that buys the building is not the doctor, is somebody else?
Yeah.
That's what I mean, is that still
Yeah,
that's
okay?
okay.
Because I know
Sure.
someone that does
Yeah,
that,
yeah.
okay.
Absolutely.
so a lot of people will own the real estate and lease it to others, and that's what we do, we like that. And so you'll have medical office owned by accountants, but they're leasing it to doctors, and that's all okay.
Give me an example, there's a building with 2 units in it, give me an example of what won't be good for the small business.
What would not be.
What we can't do at SBA on.
Okay, if any part of that building is rented to others, I don't think you can do SBA.
That's correct.
So if I wanna buy it,
It has to be the majority, I believe.
But you can do that building conventionally, we like that.
no, but real quick, just so I can get this, how do I, just walk me through it, I got 2 units, I need to own less or more than one of the half?
It's either or.
Yeah.
It just depends on which way that we,
It's just different programs they're gonna put you down.
So it's SBA
Well,
versus.
I was wondering specifically for SBA.
Okay.
Full.
So if you own the building and you rent it to other people,
Mhm.
SBA won't touch it.
Alright, so if it's 2, both units are, I'm
So
alright, yeah.
SBA is like the commercial version of, say, Fannie Mae or Freddie Mac.
Yeah, it has to be
If you
owned.
buy this property, if I finance you, you need to be owner occupied.
Just the majority.
Alright, yeah. Sorry, I thought I heard something earlier.
Majority?
and it was
Majority.
full.
Well, no, with SBA, I believe there's a percentage, and Hostas, you might be able to.
Yeah, I can't remember.
There's a percentage that has to be of what you own to what you rent out, and it has to be the majority, you
Okay.
own it,
Yeah.
rather
Yes,
than
you
you
touching
renting
on
it.
some of these LTVs, I see 75, 65, 60. If, SBA, what kind of loan to value is that gonna be for?
Well, usually they are straight 10% down, but none of these would qualify
Right,
for,
right.
for SBA. So that would be, grandma wants to start the grandma knitting circle, and she wants to buy a building and
Yeah.
buy all the stuff in it. She would have to at least invest 10%
Oh,
cash
it's not
injection.
bad.
Two big advantages to SBA, one is the low down payment, the second is you can get the deal where you wouldn't get the deal at all,
Right.
right? So that's,
10%.
yeah,
Yeah.
so that's real, 10% is very attractive, and the fact that you will get a loan where you would not get a loan is attractive. Just in investment real estate, they don't do it. So if the building is rented to unrelated parties, the SBA won't do it.
Yeah.
And you have to do it conventional. And that's what this is.
And it's subsidized?
SBA is not, well, they guarantee the loan to us, they guarantee, what, 90% of the loan or something?
Yeah, I think it's 65.
The government does.
So it takes some of the risk away from us, so we're willing to make the loan, we make the loan.
But you
Government
still
guarantees
have-
it.
It's backed
Yeah,
by-
they'll take their
Kinda like
portion,
FHA.
we'll take our portion.
Yes,
So-
the FHA commercial lending.
Here's one.
So they'll have their
That's
terms, which
what I
is
was
usually
thinking
straight
earlier.
financing,
Mhm.
which is whether it's a 10-year, and I think they can go up to 15-year, their portion would be straight, fixed rate, fixed payment, but it's going that way. Then we'd take on our side, which is usually a 5-10, 5-15, which means every 5 years it's gonna renew. That's what these 5s are and 3s are. But when it comes down to investment real estate, one thing that we have to note is a lot of that's based on your lease terms. So we don't really like a lot of 1-year leases because that's it's not good business. So we're looking for the 3 to 5 year leases on the majority of the building. Now, that doesn't mean that you have an 8,000 square foot place, you're renting out 7 units, and the one at the end that has 500 square feet that you have a year lease on, we're not gonna, bust the chops on them. If everybody else is at a 3, 5, 7 year lease, we're not gonna really have that trouble. But if you're gonna instruct your clients, make sure they try to get the longest lease terms they possibly can with each client.
So startup businesses, funky kind of businesses, where banks don't finance them, that's very looking at, you can call Matt and he can tell you, well, that sounds to me like an SBA deal, or that's an investment real estate too, or we can do that conventionally. You don't really have to worry too much about which way it's gonna go, because he can sort that out for you. Just know that it's possible. You got these things that are possible. You got SBA and conventional, you got investment real estate.
How I would handle it if I was sitting in your seat is, yes, Mr. Customer, let me call a couple of my contacts and I'll get right back with you, and then just throw the scenario back to me and I'll let you know, hey, is it looking like it's doable, or at least we can go further to collect the documents, or, you know, we might have to soft transfer them into maybe another asset that we can look into.
We don't wanna turn you into finance experts, we just wanna, you to call and we'll figure it out.
Now, with this, with commercial, like how big of a factor, obviously each one is case by case, but how big of a factor is credit when you're looking at this? Is it more business-based, collateral-based, time-based, or is credit a major factor as well?
Personal credit?
Yes, personal credit, because you're asking for personal guarantees.
We look at that really hard.
Really hard? Okay.
Credit scores, we pull the credit report and look for charge-offs, bankruptcies, things like that, so we look real hard.
You don't technically have a floor for credit scores like in a single family loan, but it's highly
Getting to the mid-sixes.
scrutinized.
I was gonna say, yeah, you don't wanna get any lower than the
Mid-600s.
mid-sixes.
Okay.
So there's a practical floor, but not a technical.
It's probably not it's not hard in the policy, but once you get into 650s, there's probably other things that are going on that.
But even FHA doesn't have an actual floor.
Yeah, so you'd have to have a boatload of
Technically.
compensating factors if
Right.
it was under that.
Right.
Small LTV, things of that nature.
Yeah, asset-based lending, we are not.
Okay, that's what I was looking for, asset-based lending.
I'm gonna call you tomorrow and double check on that the SBA, the amount, the percentage of occupancy needed
Sure.
for, cause my cousin's been talking about doing stuff, so I need to know that.
Yeah, absolutely, I'll have the answer for you. I know it's the majority, I'll get an exact, whether it's, 51 and a half, or if it's actually, 75, I'll
Right.
get an actual number.
Alright, cool, I'll call you tomorrow on that then.
Won't be a problem.
Awesome. Anything else?
I think I spoke with you on it before, the Inkster.
Yep.
310,000, almost 310 now. It's an 8-unit. Looking at this one in Toledo, it looks pretty similar other than the
Mhm.
price. I don't know how they got it for 112 in Toledo. But this one's an Inkster and it's 3 times as much.
Michigan rocks.
Michigan. That's what I'm worried about. But so we're looking at, he would be putting down 25% for these guys. Cause I've got about 3 guys right now that are kinda asking about it, but no one wants to call you or anything, so they're looking at putting down, expect around 25% down.
Sure.
Set up lunch with them, Matt will meet them for lunch.
Yeah.
Sure.
See if we can't get them.
I'll buy some lunch and we'll sit down and we'll hash it out.
And it's always, oh, well, not me, it's my friends doing it, I'm just helping them out. And I'm like, well,
We'll come around at
I'm
least
not
for the free
helping.
lunch.
Yeah.
You can't get them to make the calls, sometimes they're just.
Free lunch is always worth it.
I was gonna say, it's in there, just continue to eat while we talk.
Good as my own.
Yeah, I'll definitely look at that opportunity. That sounds like that's our bread and butter. Obviously, I have to get a little bit more in depth. But there's a couple of tricks. Obviously, we wanna see if it's investment real estate, we wanna see the Schedule E's of the present owners. And that seems to always be a sticking button, like we're gonna take it and post it all around the world. But we need to see that it's making income. We need to see the expenses, we need to see that asset, what's going on with it. So I would start at the very beginning on that. Hey, if we're looking for it, whoever the current owners are, we wanna see their Schedule E's, we wanna see their copies of their leases, we wanna see this. We wanna make sure that not all the leases are expiring in 2 months before you're gonna look to buy it without having, renewals.
So question on that, what if you had okay, I know one of our investors back in the day bought, 100-unit apartment complex, but it was in Detroit, so they were month to month, half of them didn't have leases. Would that be something you cannot finance if the buyer was a good buyer because the current owner sucks?
What kind of properties?
You know?
Is this?
100-unit apartment.
Yes.
Yeah, we run across that a lot where you just have lackluster, or you end up.
You got
know,
old school
people get
landlords.
old. The landlord has been renting to these people so long. He
Notebook.
Yes.
no longer
Coffee
cares about the
stain.
documentation, because and what happens is the opportunity falls to the wayside simply because we can't substantiate the documentation on the front end
Right.
to give confidence on the back end.
Yeah, so month to month's okay in multifamily.
Okay.
It's not okay in anything else.
Yeah.
It's okay in multifamily because it's a granular business and turnover. So we would wanna see, some sort of a rent roll.
What if they don't have one? What if they keep it in a notebook, handwritten,
Well,
or they don't keep them at all?
I get them handwritten. It's
They are okay handwritten?
But
Okay.
just
As long as we can back it up with some
back
banking.
it up, and if they have leases, they usually have something. They've gotta have a tax
I was
return.
gonna say,
Yeah.
Schedule E is gonna tell you everything. If you're saying on your handwritten rent roll that you're getting 50,000 a month in rent, and then we're getting your Schedule E and it's showing 11,000 a month in rent, there's gonna be a little bit of a
Oh
problem
yeah, there's
there.
gonna be, and there's discrepancies obviously in this
30
scenario
units
because
paid
they're not,
cash,
yeah, they're not
yeah,
claiming it at all.
Yeah.
In that case, then
Some of those
You're
are
gonna have to revise
challenging,
that
but,
schedule.
we've done a lot of business in Detroit and multifamily.
Okay.
So
So you guys can work
we can
around
work
things
through
and
it with
help
the-
them
it
with
depends
what they
on
need
what
to
the owner wants to
facilitate.
do. I mean, very easily, if there's a big discrepancy like you just said, 20,
Yeah.
30,000, we can always go back to the owner and say, listen, you're gonna have to send this to your CPA and amend this to
Amend the
to
tax
match where it's
returns.
at, in
Okay,
order so
amend
the
tax
rec- I mean, there's ways, it just depends on how hungry that owner is.
To get
To
that deal
sell.
done.
Sure.
Sometimes they have expensive list building on this building,
Mm-hmm.
and you
Yeah.
gotta fix that before we can finance it, but it is fixable.
Yeah, we're going through one right now with the same thing, that someone's trying to purchase something, and it's just not adding up. Well, this guy has multiple businesses, multiple buildings, and funneling it all through everything.
Right, and we run into that a lot.
It's not helping the seller when the buyer's doing that, so the buyer, if he wants to sell it, is gonna have to amend it.
Okay. Okay.
What if it's an empty building that they're buying? Because in Detroit, for example, they wanna buy for whatever reason,
Yeah,
and
we
there is
can't,
no Schedule E.
we can't do that. We only do properties that have cash flow.
So they have to be currently
These are
cash flow.
These are cash flow opportunities.
Right, it has to have existing cash flow.
Existing cash
Or,
flow.
or a lease from a reputable company that's gonna go into that property right away.
So
A lot
if-
of times, we'll do construction loans, right? If you're gonna build it, let's say you wanna build a strip center, we're not gonna let you build a strip center and then go find the tenants. You gotta find the tenants, build the center, and then they move in. And we've done those deals. Those deals can get done. I mean, some of these, especially some of these bigger national chains, like brand new facilities. So you'll build a 3 or 4 or 5 unit strip center, and you'll get these guys wanting to be there. This is a good location. It's brand new, and then their businesses do well.
Would you
So
need
if we can
100
get those-
would you need 100% full lease out?
80% if it's still,
80%.
if it's still cash flow.
Okay. So 80% lease out for a new construction in the strip center, and that's what you're looking for.
But it has to cash flow at 80%.
Now, going back to yours, in the big empty building, so you have Molly's projection molding that wants to buy a building. That is something that we would look, just not on an investment real estate, but if it's Sam that wants to buy an empty building to rent it out,
No, not to rent
Do
it
what?
out, to open a business.
in that case, yes, you'd bring that to us, then we'll see if we need to get
Yeah,
SBA
yeah,
involved.
that's-
That's an owner occupied
Yeah.
with an SBA to open the business and buy the building.
Say we are doing a strip, would any of those potential leases come towards the debt to income? If I say, hey, I've got family video coming in and paying me 10,000 a month, you know,
Well, a lot of times that's how it's being constructed, like he says, you'd have to just
It's
show
with
an
those
occupancy
leases.
rate of 80% and
Yeah.
it's off the cash flow.
so you can loan me $1 million as long as I've got 80% of this strip being paid for already by these other guys.
Say you buy a strip that's half full, and you can get tenants to commit to renting the rest of it. We can work with that.
So essentially, if we have some contracts in place for tenantship, that would suffice for.
Right.
And
So
those-
you say you, pick somebody, like a 7-Eleven.
Mhm.
Say you have a strip center and got an empty space, 7-Eleven says, I'm gonna rent that. And they sign a lease, that's good. So we'll use that lease lease as part of the cash flow of the strip center.
Gotcha.
Even though it's empty today, but we know on such and such a date, they're gonna be in paying.
And
Now they have
business
a
is
signed
gonna start
contract.
paying, and we have a signed contract, okay.
7-Eleven is a phenomenal tenant, they're a very highly rated
Yeah,
company.
they stick around.
Yeah, they sign long leases and they stay, because they research the location.
Right.
You know, they've got a big real estate group, they know exactly what they're looking for, rooftops,
Mhm.
you know, incomes and whatever. If 7-Eleven says they wanna rent a space, you've probably got a pretty good location.
Yeah, that one, CVS, Walgreens, all those guys, those are not corporate-owned places.
Yeah,
Right.
you know, they don't own real estate.
They don't want to.
Your investor owns the real estate.
None of them own?
I don't want any of it.
Yeah, so for instance, remember when I believe it was the Rite Aid that wanted to go off 10 Mile out there in Novi, the housing crisis stopped, they stopped building all those houses that were back off 10 Mile over there. Walgreens just said, where's my check that I can write out for the remainder of my lease, I'm out.
Yeah.
Yeah, they closed it right down.
That's big business. These Walgreens, CVS's trade nationwide in the marketplace. People are buying and selling all the time.
Some of it's like Dobbs and McDonald's, right?
McDonald's, I don't think owns a lot of theirs.
Yeah, most of
There's
those are
a bunch of
franchise.
just,
Yeah, independently owned.
Yeah,
But
independently
they have,
owned.
a lot of people rent McDonald's property to McDonald's. They have land leases, McDonald's for the restaurant. But our investor owns the land.
Yeah, McDonald's might actually own the land too in some cases, and then rent it to their franchisee.
Yeah.
A lot of them switched though. I mean, when Tim Hortons came in, all theirs were corporate owned. Everyone that you seen there was corporate owned.
Yeah.
And that was when they had Wendy's backing. Now that Wendy's and them had a little separation, now they're trying to,
Franchise
they're
out.
going every one of their franchises say, buy the land, buy the land, buy the land. We don't want it. We don't want that asset. We'd rather have you have it. So they switch on any given time.
Mhm.
Right. Cool. Good?
Yeah.